Good afternoon, students. Yesterday we discussed with the insurance claim, the last unit or last module with regard to your company accounts 1, corporate accounting 1. There, how the insurance claims is to be done and what are the procedures for doing such things, and we see the problems also. So firstly, for that purpose, we need to prepare the memorandum trading account. And then after preparing the memorandum trading account, there the closing stock is always will be the balance with regard to that. That is the loss of stock at the time of fire. That is the closing stock. That closing stock, we will deduct it from that the salvage value of the items of stock that is met for fire. Then we are getting the net loss with regard to that. And if the insured amount is less than the net loss, not a problem at all. If it is more than that, then we need to calculate the value with regard to that. So that value is the one we need to what is that? Need to get it from the insurance company. So that is called the average clause. So how the average clause or the claim to be lodged is equal to loss of stock into the insurance policy amount or the policy value amount or the policy value divided by value of stock or the date of fire. So this is the case with regard to how that value is to be ascertained. This value is the one we need to get it from, or the insurance company need to pay to the concern. So that is the claim to be lodged is equal to loss of stock into loss of stock into policy value divided by value of stock on the date of fire. So that is the case with regard to this. So once again, what all things we need to prepare? We need to prepare firstly the memorandum trading account for the ascertaining the exact value of the loss or exact value of the stock at the time of fire. When we calculated that one, we will get it the closing stock, that is the exact value, and from that we need to deduct the net loss. We need to deduct the salvage value of the stock at the time of set up the fire, or at the time of the fire. What is the salvage value or the saleable value of all the goods? Okay, that is to be deducted from where the what is that, the closing stock or the net or the gross value of the stock at the time of fire. Then we get the net loss value, and from that we are calculating the loss, the claim to be lodged, how much claim to be get it from the insurance company. For that thing, loss of stock into the policy value divided by the value of the stock on the date of the fire. And then we see problems also. For that we prepare the trading account, memorandum trading account, not the trading account, memorandum trading account. And we calculated what? We calculated the net loss after adjusting the salvage value, and also we calculated the claim to be lodged, that is the application of the average clause. So today also we will see, there is no other than this. So we will see one or two problems with regard to, and then we will go to the next portion. So illustration 3 we will do it. A fire occurred in the premises of Chakrabarti on 15th October 2017, and a considerable part of the stock was destroyed. The salvaged was 22,000. From the account books and other records that saved, the following information available for the 4 years: 14, 15, 16 and 17. Opening stock, purchases less return, wages, sales less return, and closing stock. So a fire insurance policy for 80,000 was taken for the year 2017. So the policy amount is 80,000. Prepare a statement for submission to the insurance company in support of the claim for the loss of stock. So when it is happened, 15th October. So 2017, we need to prepare the which one? Memorandum trading account. So we will look into that, how it is to be. So before going for the preparation of the memorandum trading account of 2017, we need to prepare the 3 years trading account, because here we need to calculate the gross profit on sales. So it is not directly given in the question. So we need to calculate first the gross profit ratio. So firstly, 2000 which year? Memorandum trading account. There how many years? for 3 years you need to calculate it. So 3 columns are here. In the credit side also 3 columns are required. So which year? 2014, 15, 16, here particulars, then this also particulars, debit and credit. 2014, 2015, 2016. We need to firstly calculate, this is the working for a calculation of the gross profit. Clear? Because gross profit divided by sales into 100, that is the gross profit ratio, isn't it? So we will calculate the gross profit ratio and then we will apply on the sales. So firstly, to opening stock. Opening stock, how much it is? Opening stock for 2014, it is 70,000. 2015, it is 50,000. And then 16, it is 60,000. Then two purchases less returns, 2 lakh 90,000 and 3,26,000. Okay. Then wages, how much? 20, 20 and 24. 20,000, 20,000 and 24,000. By sales less returns, it is 3 lakh, 4 lakh and 4 lakh. Okay. Then closing stock already given in the question by CL stock. How much? This is not the trading account, memorandum trading account, but this is the working for the calculation of what? Working for the calculation of 2017 gross profit ratio. So closing stock, it is 50, 60 and 1 lakh. Okay. So this 1 lakh will be the opening stock. Look here. 50 closing stock, that is the opening. 60 closing stock, that is the opening, and 1 lakh closing stock, that is the opening for 2017. Then we need to calculate the gross profit. So here how much it is? 3,50,000. So listen, 3,50,000, 4,60,000 and 5 lakh is the total. Then the gross profit here 3,50,000 for the first year, 4,60,000 for the second year, and 5 lakh for the third year. So 3,50,000 minus how much it is? 2 lakh, 2 lakh 20 plus 2 lakh 90. So how much it is? 3,50,000 minus 2,90,000. It is 60,000 for the first year. Then 4,60,000 minus 290 plus 50, 340 plus 20, 360. It is 1 lakh for the second year. And the third one, 326,000 plus 60,000 plus 24,000, 4 lakh 10,000 minus 5 lakh, it is 90,000. Clear? So we got the what is that? We got the gross profit. Then we need to calculate the gross profit ratio. So see. 60,000, 1 lakh and 90,000. We need to calculate the gross profit ratio for each month or each year, not month. So first case is how much? 2014 is equal to 60,000 divided by 3 lakh into 100. Okay. So this also 3 into 2, 6. So 20% for the first year. 2015 is equal to 1 lakh divided by 4 lakh into 100. This and this is over. This and this is over. So how much? 25. So 25% for the second year. And then 2016 is equal to 90,000 divided by how much? 4 lakh into 100. This and this over, this and this over. So 90 divided by 4, how much it is? So it is 22.5%. See, 22.5%. So we need to calculate the 22.5% with regard to the memorandum trading account for the year 2007. Clear? So like the same, we need to calculate the memorandum trading account for the year 2017. So keep it in mind, 22.5 for the gross profit ratio. So trading account, memorandum trading account for the year 2017. Okay. Then opening stock. Opening stock, 2 opening stock. How much it is? 1 lakh. 2 purchases less returns. How much it is? 2,40,000. 2 wages. It is 22,000. By sales less returns, it is 3,20,000. Then closing stock, we need to calculate as the last figure. Then what is that? 2 gross profit, 22.5% on 3,20,000. Sales in the ഓരോ വർഷവും അതാണ് നിങ്ങൾ നോക്കിയാൽ അറിയാം കഴിഞ്ഞ എത്രയാണ് 20%. അപ്പൊ ആ 20% സെയിൽസിന്റെ ഇതായിരിക്കും അടുത്ത ഗ്രോസ് പ്രോഫിറ്റ്. അങ്ങനെയാണ് പോകുന്നത്. സോ 3,20,000 22.5% എടുക്കുക. So we will check it how much. 3,20,000 into 22.5%. It is 72,000 here. So take the total of all these and then minus the sales. 72,000 plus 22,000 plus how much? 3,40,000. It is 4,34,000 is the total. So by closing stock, 4,34,000 minus 3,20,000. It is 114,000. That is the what loss on stock of value. Then the salvage value is given as 22,000. So this is the loss at the time of stock on fire. Clear? Loss at the time of stock on fire. From this, we need to calculate. We need to deduct the salvage value. Then we get the net loss on stock of fire. So next, this is memorandum revaluation account we prepared. Next procedure is what? Next procedure, we need to calculate the which one? Net loss on stock of fire. So see, statement of claim for loss on stock of fire as on the 15th October. 15th October എത്രയാണ്? So book value of stock 114,000 less salvage value how much? 22,000. So it is so 92,000. See, 92,000 is the loss of stock. Then we need to calculate the average clause. Average clause in the another case of ഓർക്കേണ്ടത് policy value, insured value, loss of stock നെക്കാട്ടും കുറവാണെങ്കിൽ ഇവിടെ കുറവാണ്. എന്നാൽ കഴിഞ്ഞ രണ്ട് പ്രോബ്ലത്തിലും policy value loss of stock നെക്കാട്ടും ഇതായിരുന്നു. അല്ലേ? Policy value ഇവിടെ 80,000 ആണ്. while loss of stock 92,000 ആണ്. ഇപ്പൊ ഇത് 72,000 ആണെങ്കിൽ we can't calculate the average gross because insured there is insured. ഈ കമ്പനി ഇൻഷുർ ചെയ്തിട്ടുണ്ട്. Isn't it? ഇവിടെ ലോസ് ഓഫ് സ്റ്റോക്ക് 92,000ഉം പോളിസി വാല്യൂ 80,000ഉം ആണ്. അപ്പോൾ 12,000 ഡിഫറൻസ് ഉണ്ട്, 12,000 ഡിഫറൻസ് ഉണ്ട്. ദാറ്റ് 12,000 അതിന് വേണ്ടിയിട്ടാണ് ഈ ഒരു ഇത് എടുക്കുന്നത്. ലോസ് ഓഫ് സ്റ്റോക്ക് ഇൻറ്റു പോളിസി വാല്യൂ ഓഫ് ഡിവൈഡഡ് ബൈ average stock on the date of fire, or sorry, value of the stock on the date of fire. So ascertainment of the claim to be lodged is how much? Loss of stock is 92,000 multiplied with policy value is 80,000, isn't it? 80,000 divided by value of stock on the date of fire, it is 114,000. So this and this is over, isn't it? Then 80 divided by 114, 80 divided by 114 into how much? 92,000. It is 64,561 is the amount. See, rupees, they will get it 64,561. So this is the case with regard to which one? This type of problems will ask, because we need to calculate three things. One is the memorandum trading account, where the book value of the stock at the time of fire we need to calculate. From that we are deducting the salvage value. Then we get the net loss on the stock of fire. And then if the insured amount is less than the loss of stock, then we need to calculate. Or if the insured amount is more than that, not a problem. If it is less than the case, we need to calculate this one, ascertainment of the net loss of stock, or the average gross fire. Loss of stock multiplied with the policy value divided by the book value of the stock at the time of fire. So clear? This is the case always question in the university exam. Okay, so we will do another problem also for this, because that is why this is very important for you people. Will score high marks also from this. Very easy, isn't it? Because you need to calculate the trading account and deduct the salvage value from the book value, and then if the amount is like that, we need to calculate this formula. We need to apply this formula. Otherwise, no. Clear? Okay. So we will do this problem. Third question number 3, practice problem. A fire occurred on 15th April 2017 and destroyed the business premises of Johnson and Company. The books of accounts and stock amounting to 18,000 was saved. That means salvage value is 18,000, and the following information was available. Year ended 31st December, 12, 13, 14, 15, and 16. 5 years. Okay. Sales and gross profit is there. Stock on 31st December 2016 was valued at 97,000. So 31st December 2016. Then the purchases and sales and productive wages from 1st January 2017 to 14th April 2017 were ascertained as 75, 1,59,000 and 30,000. Prepare a statement in support of the claim for the loss of the stock against the insurance company. So we need to prepare firstly what? The memorandum trading account, isn't it? So memorandum trading account, we need to calculate it. To opening stock. Opening stock is how much? Yes, gross profit is directly given in the question. Okay. Okay, so I think opening stock is not there. Stock is on December 31st, 2016, 97,000. So we'll check it. So here in this problem, see, this is the memorandum trading account for the year 2017, where opening stock is 97,000, purchases is 75,000, wages is 30,000, and sales is 1,59,000. These are the items to be given in this question. We need to calculate the gross profit. So for this, here the gross profit rate is that how much we need to calculate. So for this, year ended for the 5 years is given. So here gross profit divided by sales into 100, that is the gross profit percentage. So first year how much? First year, 2012, it is how much? 2,15,000 divided by 8,60,000 into 100. Second year, 2013, it is 2,13,000 divided by 7,10,000 into 100. Then third year, 2014, it is 2,10,000 divided by 6 lakh into 100. Then 2015, it is 1,87,000 divided by 5,50,000 into 100. Then and 2016, that is how much? 1,72,800 divided by 4,80,000 into 100. So in this way, we need to calculate the gross profits for the each and every year ratio. Gross profit is given, the ratio we need to calculate. So 2,15,000 divided by 8,60,000 into 100, it is 25%. First year it is 25%. Second year it is 30%, isn't it? We check it once again. 2,13,000 divided by 7,10,000 into 100, it is 30%. Third year 2,10,000 divided by 6 lakh into 100, it is 35%. Then fourth year it is 1,87,000 divided by 5,50,000 into 100, it is 34%. Okay. Then fifth year it is 172,800 divided by 4,80,000 into 100, it is 36%. Then we need to take the average profit of all these for calculating the gross profit for the year 2017. So how many years? 5 years. So take this 25 plus 30 plus 35 plus 34 plus 36. So we will take it the average. 25 plus 30 plus 35 plus 34 plus 36. So 124 plus 36, 160. 160 divided by 5 is equal to 32%. See the answer. This is the answer for the calculation of what? Average profit. So now 32% we got it. How it is to be? All the gross profit ratio to be calculated and that to be divided by 5, we will get the average profit. Then we need to calculate the gross profit for the year 2017. That is 32% on 1,59,000. 32% on 1,59,000. 1,59,000 into 32% is 50,880. Then take the total of this. Okay, take the total of this. So how much it is? 50,880 plus 30,000 plus 75,000 plus 97,000. It is 252,880. 252,880 divide minus 159,000. So it is C by closing stock. It is 93,880. Clear? 93,880. Then what we need to calculate? This is the book value of the stock at the fire. Then book value is equal to 93,880 less salvage value, that is given in the question as 18,000. So the net value is equal to 93,880 minus 18,000. It is 75,880. Check. Answers is amount of claim to be get it from the insurance company, that is 73,880. How it is to be 75,880. So what only this we need to prepare. Memorandum trading account, all the items to be debited and credited, and the closing stock is the balance value. Then What we need to calculate? Net profit. Net profit, how we need to calculate? Take the profit for the gross profit ratio is given and sales is given. We need to calculate the gross profit ratio and then take the average of that. Then we will get it this one. Okay, so 5880 is the net profit, and then take this is the balance. That balance is the book value of the stock to be deducted from the book value of the stock, the salvage value. We will get the amount of claim. So this type of questions will pass. So we will do one more problem also, like the same method. So we will do this problem also. Premises and stock of Karamchand stores were totally destroyed by fire on 30th January 2017. From the account books and other records that are saved, the following information is available. Stock on hand always been valued at 10% less than the cost price. Opening stock value, purchase less return, sales less return, wages, closing stock. We are going to prepare this of memorandum trading account of for the year 2017. So before that, we need to calculate the amount of gross profit and also the closing stock, isn't it? For we need to calculate the gross profit ratio for these years. So firstly, how much it is? Opening stock that is for 2014, 15, 16, then 2014, 2015, 2016. Trading account we need to prepare here. So this is the particulars, and this is the particulars. Okay. Opening stock is to opening stock. How much? 27,090, 32,400, 36,000. Two purchases less returns. How much? 74,900, 80,000, 81,000. Then two wages. Wages it is 17,400. Then 19,000 and 20,900. Then here by sales less returns 1,20,000. Then 1,32,000, and 2016 it is 1,40,000. So 1,40,000. Then by closing stock 32,400, then 36,000 and 36,900. So we need to calculate the gross profit to GP, isn't it? To GP for the first year, second year, and third year. Then we need to go in from the last year. Okay. So how much it is? It is 1,20,000 plus 32,400. It is 1,52,400. 152,400. Okay, here also 152,400. Then second year 1,32,000 plus 36,000, 168,000. Okay, 168,000. Then 140,000 plus 36,900. It is 176,900. So here also 176,900. Then take the difference between these. 27,090 plus 74,900 plus 17,400. 119,390 minus 152,400. It is 33,010 for the first year. Then second year it is 32,400 plus 80,000 plus 19,000, 131,400 minus 168,000. So 36,600. Then third year, 36,000 plus 81,000 plus 2,900, 137,900 minus 176,900, it is 39,000. So we calculated the gross profit also. Next, we need to calculate the gross profit ratio, isn't it? Let gross profit ratio we calculate here. About first year 2014, 33,010 divided by 1,20,000 into 100. Second year 2015, it is 36,600 divided by 1,32,000 into 100. Then 2016, it is equal to 39,000 divided by 1,40,000 into 100. So we will calculate the 33,010 divided by how much? 1,20,000 into 100. It is 33,010. Then that is 27.51. 27.51%. Then second year 36,600 divided by 1,32,000 into 100. 27.73%. The third case 39,000 divided by 1,40,000 into 100 is 27.86%. So we will calculate it average 27.86 plus 27.73 plus 27.51, 83.10 divided by 3 is equal to 27.7, that is 28%. See, approximate we need to calculate, okay? Better approximation. So we will change it into 27.51. So it is 28. We'll check it correctly. 28 is coming out now. 28 plus 27.73. 28 plus 27.86. 28. 84. 84 divided by 3. See, 28%. Correctly it is coming. Okay. So we will take the approximate percentage. Approximate percentage. So that 28% we need to charge the gross profit out of the sales for the which year? 2017. So like the same, we need to prepare the memorandum trading account for the next year. Next year means 2017. So how much? 28%. Then the memorandum trading account is memorandum trading account year 2017, amount column, particulars column, and then same amount column and the particulars column. So here particulars, amount, particulars, amount. Okay. Firstly, what is that? Opening stock. Opening stock is how much? 36,900. 2. Purchases less returns. 6,000. Then buy sales less returns 12,000. Okay. Then what is there? Wages. Wages it is 2,000. To wages 2,000. Okay. Closing stock we need to calculate at the last because that is the balancing figure. So that is the book value of the stock. To gross profit it is 28% on how much? 12,000. That is the sales, isn't it? So 12,000 28%. 12,000 into 28%. It is 3360. Then take the what? Take the yes total. 3360 plus 2000 plus 6000 plus 36,900. 48,260. Total is 48,260. 48,260 minus 12,000. 36. Students, there's a correction like that. Stock on hand is always be valued at 10% less than the cost. Means the given stock, how much it is? There's a correction in the sense opening stock is valued at in this way. Given stock at 36,900 into 100 divided by 90. That is less than the cost. 10% less than the cost. So 41,000 is the which one? Opening stock. So the rest is 41 plus 6 plus 2 8. 40 6 plus 2 8. 49,000 plus 3. How much? 52. 52. So here, how much it is? 41,000 plus 6 plus 2 8 plus 3 11 360. It is 52,360 minus 12,000 is 43,360. See the answer. Amount of the claim is by closing stock 43,360. This is the balancing figure. So the actual value of the stock is what? Book value of the stock at the time of fire is 4360. But here there is no salvage value it is given, so we can't assess or calculate that thing. Okay, clear? So this is the problem with regard to the insurance claim. Okay, so today we discussed I think 4 problems like that. Only the thing is that what we need to prepare that memorandum trading account, and then 4 years or 5 years it is giving, and then we need to take the average profit, average gross profit for each and every year, isn't it? So for the suppose 4 years are giving, and we need to calculate the memorandum trading account of 5 years, and the 5th year we need to take what? The gross profit. The ratio will be what? The average profits for the 4 years. So the 4-year profit we need to calculate. The data must be given in the question, and then we need to divide it by 4, and then we get the what percentage for the next year. That percentage and all the other items to be debited and credited, and the final balance also to be there. That final balance will be taken as the book value of the stock, and from the book value of the stock we are deducting the saleable value or the salvage value of the stock at the time of fire or at the date of fire. Then we will get the net loss. From the net loss, if the insured amount is what is that? Less than that, we need to what? No need of that. Then if the insured amount is if the insured amount is less than that of the book value or the amount of the claim, then we need to calculate in another form, use another formula for the average loss of stock into policy value divided by the book value of the stock. Then we get the amount to be refunded from the amount to be getting from the insurance company. So these are the type of problems we need to deal with the insurance companies or insurance claims. So we will do this problem also, and then we will wind up the session. On 18th November 2016, a fire occurred in the premises of trader Messrs. Tripathi. Most of the stock were destroyed except some goods costing 8,500, which was saved in a good condition. In addition, some stock was salvaged in damaged condition and its value was estimated at 3,500. So 8,500, that is the first case, and the 3,500 the second case. So both are the salvage value. From the books of accounts, the following particulars were available. Stock on 1st April 47,000 for opening stock. Purchases 1,66,000. Sales 2,20,000. Carriage on purchases 12,000. On the basis of the past few years, it appears that gross profit rate is 33 and 1 by 3%. Okay, on cost. So stock was insured for 45,000. So 45,000 is the insurance policy value. If that is the above the book value, then we need to calculate the average gross. So we will check it how it is. So like the same, we need to prepare the memorandum trading account. So memorandum trading account, which 2016. This is the particulars, this is the amount column, and this is the this. So particulars, amount, particulars, amount. Then to opening stock, how much? 47,000. To purchases less returns, how much? 1,66,000. To what is that? Wages or carriage on purchase and wages, that is carriage inwards, that is 12,000. Then sales is 2,20,000. Then by closing stock, that is the balancing figure. Then to gross profit brought down, sorry, carried down. That is on the basis of the past few years, it appears that gross profit rate is 33 and 1 by 3%. So how it is to be calculated? We'll check it. Sales in the 33 1 by 3. So 33 1 by 3, how much? 0.33. So 33.33% of 2,20,000. 73. Yes, on cost, on not on selling price. So 33.33 divided by 133.33 into how much? 2,20,000. It is 54,995.87. So it is approximately 55,000. So see, gross profit is equal to 33.33 divided by 133, means it is on cost price. That is to be there in the question. 33 and 1 by 3% on cost. So it is 55,000. Then take the total of this and minus that. So 47,000 plus 1,66,000 plus 12,000 plus 55,000, 2,80,000 minus 2,20,000. So 60,000 is what? 60,000 is the book value of the stock. So book value 60,000 less salvage value 8,500 plus 3,500. So 12,000. Isn't it? 12,000 is there. So 48,000 is the loss of stock. So net value of the loss of stock is how much? 48,000. So see, 60,000 is the book value. About insured value 45,000. So we need to calculate the average cost. So loss of stock is equal to 48,000 into loss of stock or claim to be lost is loss of stock is 48,000 into policy value is 45,000 divided by book value of the stock. Okay, 45 divided by 60 into 48,000. 45 divided by 60 into 48,000. It is 36,000 is the claim to be launched. So please do as much as problems, and we will do the problems in the next class. Okay. So please have a look at today's topics and please clear your doubts as I noted. and please confirm after the video uploaded. So thank you for that.